Why, despite following conventional financial wisdom, are you not where you want to be financially? Many of us have asked this question. We've all been given financial advice to help us become prosperous. But what if we told you that some of this advice, these so-called truths, are actually myths, misconceptions that could be holding you back from achieving your financial goals? Today you will discover the shocking financial lies you've been told your whole life. We'll shatter the illusions, reveal the truth, and provide you with the financial wisdom you need to navigate your financial future. First off, the myth that all debt is bad. This is a common belief, but it's not entirely accurate. You see, not all debts are created equal. There's bad debt, yes, but there's also something called good debt. Bad debt is generally what we think of when we hear the word debt. It's debt that doesn't bring any return, like credit card debt or high-interest loans. These types of debt drag us down and hinder our financial growth. On the other hand, good debt can actually benefit us. It's debt that's used to invest in something that will grow in value or generate income over time. Think of a mortgage for a home that increases in value, or a student loan for an education that leads to a higher paying job. These strategic borrowings can lead to financial gain in the long run. So, all debt isn't bad, it's about how you manage it. Next up, the myth that you have to work hard to get rich. Let's dissect this misconception, shall we? There's no denying that hard work plays a part in financial success. That being said, it's not the only ingredient in the recipe for wealth. Enter passive income. This financial marvel allows you to earn money with minimal active involvement. It's about setting up streams of income that continue to generate cash, even when you're not actively working. Think real estate investments, dividends from stocks, or revenue from a blog. It's also about working smart. Instead of trading your time for money, focus on creating systems or investing in assets that will generate income. We live in an era where smart work often trumps hard work. So don't just work hard, work intelligently. Let me know in the comments which is more important for becoming wealthy, working hard or working smart. Ever heard the myth that only rich people can invest? It's a common misconception, but the reality couldn't be more different. Investing isn't just for those with deep pockets. In fact, there are a plethora of investment options available for people at every income level. Just starting out, no problem. You can explore vehicles like low-cost index funds or robo-advisors. These options provide a great entry point into the world of investing, often requiring minimal initial investment. But why invest? It's simple. Investing, even in small amounts, can help grow your wealth over time. Thanks to the power of compound interest, even modest contributions can grow significantly over the long term. Start early, be consistent, and watch your wealth grow. Remember, it's not about having a lot to start with, it's about starting, period. So, don't be fooled by the myth. Investing isn't a rich man's game, it's a smart man's game. I hope you are enjoying this video. Please like and subscribe for more content to help you achieve financial freedom. Let's demystify the myth that saving is the best way to build wealth. Saving, while a crucial financial habit, isn't the golden ticket to wealth creation many believe it to be. The reason is simple. Savings accounts typically offer minimal interest rates, barely keeping pace with inflation. Imagine squirreling away $1,000 in a savings account with an annual interest rate of 1%. After a year, you'd only earn $10. That's a slow crawl, isn't it? Instead, consider a diversified financial strategy. Combine saving with investing in stocks, bonds, or real estate. These avenues, while having their own risks, offer higher potential returns and can significantly accelerate wealth accumulation. Think of it like planting a seed. Saving is like putting the seed in a pot with soil. It's a good start, but to truly flourish, it needs sunlight and water. Those are your investments. Now let's tackle the myth that buying a house is always a good investment. It's a common belief, right? The idea that purchasing real estate is a surefire way to build wealth. But like most financial decisions, it's not that simple. Real estate can be a fruitful investment, but it's not a one-size-fits-all solution. You see, buying a house involves many factors that can turn a seemingly good investment into a financial pitfall. Market conditions, location, property taxes, maintenance costs, and the interest rate on your mortgage can all tip the scales. And let's not forget the time and effort it takes to manage a property. You need to do your homework, plan wisely, and sometimes even be prepared to weather a storm or two. So while it's true that homeownership can provide financial security and even a sense of accomplishment, it's not a guaranteed golden ticket. What about the myth that retirement is something you do at 65? Let's debunk this. Retirement isn't about hitting a certain age, but rather reaching a certain financial state. It's about having enough saved and invested to be able to live comfortably without needing to work every day. The concept of early retirement is gaining traction, with many people aiming to retire in their 50s, 40s, or even earlier. This is achievable by living below your means, saving and investing wisely, and having a clear financial plan. Consider this: if you start saving and investing in your 20s instead of your 30s, the power of compound interest means you could potentially retire a decade earlier. It's all about making your money work for you, rather than you working for your money. So, let's break free from the traditional mindset that retirement is an age. It's not. It's a financial goal. Ever believe the myth that higher education equals higher income? It's a common belief, but the truth is a bit more nuanced. Sure, a degree can open doors, but it's not the only key to success. Let's talk about skills. The world is changing rapidly. Many of the highest paying jobs today didn't even exist 20 years ago. Skills in technology, digital marketing, and entrepreneurship are in high demand and often don't require a traditional degree. Experience is another big player. Practical, hands-on experience in a field can be just as valuable, if not more so, than theoretical knowledge. And let's not forget about entrepreneurship. Some of the wealthiest people in the world didn't follow the traditional education route. They found a problem, created a solution, and built their fortune from there. Let's debunk the myth that you should only have one source of income. This idea is as outdated as the notion of staying at the same job for 40 years. In today's dynamic world, relying on a single income source is like putting all your eggs in one basket, risky and precarious. It's essential to cultivate multiple income streams for financial security and wealth building. Consider this: if you lose your job, what happens? If you only have one income source, you're left scrambling. But if you have multiple streams, one loss isn't as devastating. Moreover, multiple income sources can accelerate your journey to financial freedom. These could be anything from a part-time job, freelance work, to investments, or even a side hustle turned profitable. Diversifying your income can offer increased security, less financial stress, and greater opportunities for growth. So remember, financial security isn't about one income source, it's about multiple income streams. Now, the myth that credit cards are evil. Let's unwrap this, shall we? Credit cards, like any tool, are as good or as bad as the hand that wields them. Used wisely, they can be a powerful ally in your financial journey. They provide an opportunity to build a strong credit history, which is pivotal when applying for loans or mortgages. Moreover, many credit cards offer rewards programs giving you cashback, travel points, or discounts on purchases, essentially providing a bonus for spending money you were already planning to part with. These benefits can add up significantly over time, making credit cards a savvy tool for the financially astute. However, like fire, credit cards must be handled with care. Irresponsible use can lead to spiraling debt and financial hardship. The key is to pay off your balance in full every month, avoiding interest charges and maintaining a healthy credit score. Ever thought that rich people are just lucky? A common misconception indeed. But let's delve deeper into this. Wealth creation isn't a lottery. It's not won by chance. It's a culmination of hard work, strategic decisions, and resilience. Imagine playing a game of chess. It's not luck that determines the winner, but strategy, foresight, and the ability to make smart decisions under pressure. Similarly, building wealth is like playing chess with your finances. It requires careful planning, a deep understanding of the financial landscape, and the ability to seize opportunities when they present themselves. And let's not forget resilience. Every wealthy individual has faced financial setbacks, but it's their resilience, their ability to bounce back from these setbacks, that sets them apart. They learn from their mistakes, adapt their strategies, and continue moving forward. Let's debunk the myth that buying more things makes you happier. We live in a society that thrives on consumerism, where the latest gadgets and trends are often equated with joy and satisfaction. But can the thrill of a new purchase truly bring lasting happiness? Studies suggest otherwise. The initial excitement tends to fade quickly, leaving us in a constant cycle of buying and wanting more. Instead, consider this: financial freedom. The ability to make life decisions without being overly stressed about the financial impact can provide a more profound and lasting sense of happiness. It's not about owning the latest iPhone or the biggest house on the block. It's about having the freedom to pursue your passions, spend quality time with loved ones, and create meaningful experiences. So, the next time you're tempted to splurge on that new designer bag or high-end gadget, ask yourself, is this purchase contributing to my financial freedom or simply feeding my desire for more? Ever heard the saying that money is the root of all evil? This phrase has been echoed time and again, but today we're going to challenge that belief. Money, in its purest form, is simply a tool. It's a means of exchange, a way to acquire goods and services. It's not inherently good or evil. It's how we use it that determines its character. Imagine money like a hammer. In the right hands, it can build homes, schools, hospitals. In the wrong hands, it can cause destruction. The same goes for money. It can be used to fund charities, support education, and drive innovation. Alternatively, it can be misused to fuel corruption, greed, and inequality. The key lies not in shunning money, but in understanding its potential for positive change. It's about learning to wield this tool effectively and responsibly, turning it into an agent of good. Let's debunk the myth that you need to be financially stable before you start giving back. You see, giving back isn't solely about monetary donations. It's about contributing your time, skills, and energy to causes that resonate with you. Even on a tight budget, you can make a difference. Think about it. Volunteering at a local charity, mentoring a young person, or sharing your expertise pro bono are all forms of giving back that don't require a bulging bank account. The idea here is to foster a culture of social responsibility, regardless of your financial status. Moreover, giving back in any form can bring you immense satisfaction and a sense of purpose that money can't buy. It can enrich your life in ways you never imagined, providing perspective and fostering gratitude. So don't wait until you've hit some elusive financial milestone to start giving back. Start now. Because giving back isn't about financial stability, it's about compassion and responsibility. We've demystified a lot of financial myths today. Remember, financial literacy is the key to financial freedom. Thanks for watching, and don't forget to like, subscribe, and click the notification bell for more enlightening videos. I will see you in the next video.